Hey guys, good morning. Good morning. Hope everybody's having a good day today. So let's take a quick look at what's happening in the market. Like always, my name's Najarro. We'll just take a quick look at what's happening, some of the earnings that happened today. I think the market's pretty intense today. So let's just jump right into it. My camera should be fixing itself in a bit. I kind of got a little late head start today, but things should be kind of going pretty smooth from now. So let's see. Right, today before the market opened, we had Palantir, right? I'm pretty sure a lot of you guys or Palantir seems to be a very popular stock. Earnings seems to be doing good, right? Stock price is up 10.5% right now. A lot of other stocks are trending. I do want to say Micron Technology is probably what's going on, Gordon? How's it going? Micron Technology is down about 7.5%. I think it's just crazy with the overall pricing of memory. This is definitely one of the risks with the stock. So this is probably a video I'm gonna be doing in the next few days on Micron Technologies, especially at these prices, to really take a look at that memory pricing. If we take a look, what else? NEO reported earnings yesterday, I believe, right? NEO reported after the market closed. The stock price is down about 5.35%. We also had some strong movers, right? Clover reported is up 9.8%, but it's kind of pulling back down. What else do we have? Ride was up about, it's up about 2.1%. Again, kind of pulling back down. It seems like stocks, even though they're starting up high this morning, things are just pulling back down. And I'm not gonna lie, I'm a little not too excited about looking at my overall portfolio. So let's take a quick look at what's happening in the market. Let's take a quick. So Dow right now is down about 0.28%. Nasdaq is down about 0.43%. What's going on, Adam? What's going on, Danny? You know, for some reason my chat is not updating. So guys, give me one quick second, because I can see the chat here, but I don't see the chat in. So give me one quick second. Not sure why that is happening. There we go. So what's going on, Adam? What's going on, Danny? Thank you guys. How's it going? Hope you guys are having a good morning. So like Dow right now is down 0.28%. Nasdaq is down 0.43%. The S&P 500 is pretty. So everything seems to be red, and it kind of started off like in the morning a little bit high and kind of been pulling down since then. If we take a quick look at screeners, I mean, it seems like everything is pretty much in the red or either baby green, except things like Danny. Danny's doing amazing with that Palantir. So congratulations, Danny, on that play. But we can see, right, Micron Technologies is definitely one that's taking a huge hit right now. Let me take a look at TradingView right now to see where Micron is at. Let's see, MU. So I do believe the main thing right now is just the overall memory pricing. I think a few analysts came out yesterday or earlier this week and kind of mentioned that, hey, right now prices for memory are going to start decreasing. So that's definitely affecting Micron, because at the end of the day is gonna affect them in one way or another in their bottom line if prices continue to go down. But this is a story that Micron gets a lot, right? This is not the first time Micron has to worry about pricing. But it does create some form of cyclical, I want to say cyclical aspect to Micron. I mean, if we take a quick look at the 5 years, I'm pretty sure we can see when like memory prices increase, when memory prices decrease, when huge demand for memory is out there. And that's why I want to say Micron Technologies is a very cyclical stock. But let's just jump back to right now. So right now, I definitely believe, I mean, where was that right now? I thought was strong support level. Jose, you have you seen Celsius numbers? No, I have. What's going on, Tim? Danny, hope Airbnb does well. So right, I mean, I'm not a technical expert. I just take a look at just overall stock price or overall volume wise. I liked it there. I still think it's strong here. Obviously, volatility can continue to come out. So obviously prices can go, but I do believe a good portion of the risk has been eliminated. So Micron might be a video I might be looking into. So Celsius did report earnings, right? Let me take a quick look. So Celsius stock right now, unfortunately, even though earnings were strong, is down 6.6% right now. So let's take a quick look at Celsius. I want to look at the charts. But I mean, this is the thing, right? Celsius, Celsius is a company I understand the pullback. I mean, it was pretty overextended from early on. So overextended doesn't give you a guarantee, but it just says, hey, investors are a little bit too excited right now. But we can see from the pull down, it does seem like the stock is kind of pulling back up. So Celsius, even though a 6.6% drop, it's still at levels higher than just a few days ago. So, I mean, sometimes, right, let's take a quick look at how Celsius, one thing I hate is Celsius investors website. I think their website or their investors relations could do a lot better. Normally I don't see, look, come on, just give me your damn presentation is all I really care about. So investors, let's see, company, no, financial information. Currently, all right, let's see the report. Did they not even give a presentation? Oh my goodness. These people. Press release. Let me just see. Celsius reports second quarter. I believe it's their second quarter. This is this today? Let me see. Download PDF. Second quarter. Is second quarter now? They don't even put a date. Come on, Celsius. Give me a date. I just want to make sure I'm in the wrong way. Yep, yeah, so this is June 30th. So let's see. Let me just take a quick look. So Celsius revenue growth compared to same time last year was 117%. That is insane, right? Revenue growing 117%. North America revenue is still a huge growth for this company, right? North America revenue is the biggest portion. It makes up, I want to say, a roughly 80% of its roughly 80%, maybe a little, about 80% of total revenue comes from North America. And that segment alone is up 158%. International revenue is still up, but we can see there's still plenty of growth in North America. Some investors, I would say, might get kind of freaked out with that international revenue not being as strong. I think right now they should just continue focusing in North America. Once things start to flatten out in North America or start to slow down dramatically, I think that's when it's time to kind of go on and start looking at other markets, right? AP, we can definitely take a quick look at Spotify in a bit. So my theory on the drop is investors want to see international revenue grow more. Probably, right, Tim? That's definitely a thing. But you just actually, so you just agreed with me. That's awesome, right? I like when we kind of think about the same thing. Oh my God, I was looking for Gravity earnings today. I thought it was Friday. Oh man, you got me excited. I thought it was Friday too. Just kidding. So let's see how Gravity's doing. But I want to keep looking at stock. So Gravity is definitely one that moves a lot, like Fizz has said in previous times, due to volume, right? This is a very low traded volume company. I think yesterday was less than 100,000. So this is one that's very, very volatile for that. But let's continue with Celsius. I want to keep looking. So gross EBITDA is continuing to grow. It grew 204% compared to the same time last year. It also grew about 139% compared to the 6 months, right? 6 months of 2021 compared to 6 months of 2020. So they are seeing triple digits in both fitness and vending channels. So, I mean, overall, this is still a huge growth monster. But I do agree with, I think Fizz was the one that mentioned it, right? Celsius has a crazy price to sales ratio, I believe, compared to a lot of these other companies. But I don't think any of these companies are also growing at 117%. So the real question is, yes, it's a bit overvalued if we compare it to other companies, but is that value worth it? And I think that's where a lot of either negativeness or positive comes from investing. But let me see. I want to see another thing. International revenue. I mean, this is a company that's really increasing in overall brand. I mean, I feel like every athlete out there, or like every influencer, even on YouTube and other platforms, are just talking about Celsius, right? So I don't have other platforms, but you guys share a lot of that information. But let's see. On Amazon, Celsius is the third largest drink with 13% market share of the energy drink category. That's Riz, you know, that's actually pretty impressive, right? For them to hold 13.12% of the share in the energy drink category, that's huge. They are only 1.3% behind Red Bull at 14.4% and 18.13% share behind So Monster still owns a lot, right? Monster owns about 31.25% of the market share on Amazon, and this is under the energy drink category in the United States. The only thing I would say is it's already a big market share, right? 13.12%. The real question here is how much more can it grow? Can it actually end up beating Red Bull in market share? And Red Bull is already pretty big. Is Red Bull a public company? I just want to see what's Red Bull's valuation. So Red Bull in 2021, Red Bull had a brand value of about 15.9 billion euros. All right, this is interesting. 15.9 billion euros. What is Celsius' current valuation? Celsius valuation is about 5.43. So it's about 17 euros to US dollars. So that's about a $20 billion valuation. What's going on, Alex? So thoughts on Oliver? We can definitely take a quick look at Gravity in a bit. But look, this is pretty not weird, but something to keep an eye out. So Red Bull right now, obviously Red Bull is in a whole different category, but Red Bull in 2021 has a valuation of about $16 billion. I think Red Bull is a private company, so that's just its private valuation. Now, if we take a look at this earnings at this portion, Red Bull right now owns 14.4% of the market share. In Amazon, Celsius owns 13.12%. Yet Celsius is a lot cheaper. A lot cheaper than. Oh, actually, that might be the wrong Red Bull, right? Am I thinking? But Red Bull also does other stuff, right? So it might not be a one-to-one valuation now that I think about it. No, they are not public. I think, but Monster and Red Bull throw major money, a lot other things to keep their name out there, right? So that's true, right, David Becker? I mean, there's like the Red Bull Stadium. I wonder if it's part of Red Bull. So Red Bull definitely has other brands to really increase its valuations. But just something to keep in mind, right? We've seen Celsius kind of do. They're still in early stages, still a beginning company, but eventually they will be able to throw down that type of money to other things out there. Right now, I think they're just focusing on influencers. Maybe they might start focusing in strong athletes in the future. So definitely huge potential, right? Celsius has the potential for sure. And that's what a lot of these growth stocks do, right? They have the potential to continue to grow. The real question is it going to be executed? So Celsius stock right now, like I meant, as I am talking about it, obviously, big boys are watching my channel. So it was down about 7% when I was looking at it. But we have some big whales in this channel, and now it's moving 5%, right? If Celsius is down, I'm more worried about Tattoo Chef. Its valuation is also high for its industry. So the question, right? I mean, Fizz, it's weird. Look, 4.87%. Thank you to the big whales buying right now. If Celsius, so obviously, right? Celsius is down right now. 5% down seems like a lot, but I mean, in the past 5 days, is down 1.6%. So I do think in the short term of things, it might look ugly, but in the past month it's up 3%. In the past 6 months it's up 19%. Hey, big whales, raise your so let's take a look at Tattoo Chef. I think Tattoo Chef might be a little bit more excited. In the past 5 days it's up 0.47%. In the past month it's up 1.5%. In the past 6 months it's down 13.26%. So it just kind of shows that overall excitement. I do think the overall excitement for this. Ed, appreciate the support. Thank you for being a support member. You guys are awesome. Danny, Ed, Fizz, Tim. Thank you guys. Danny, I don't know if I said Danny. I'm going to say Danny twice. But thank you guys for the support. And thank you so much. So Tattoo Chef, right? Definitely. I understand, agree with Fizz, right? Valuations on some of these stocks are insane at the moment. Huge growth. But definitely. So if you guys are not familiar, today we have some impressive earnings. Palantir did this morning. Stock price is doing amazing, right? This is one of those few popular stocks I want to say I don't follow as much, but Palantir is up 12%. I wonder if anybody here, I know Danny is in Palantir. Is anybody out here a Palantir bull? Congratulations. Let's see what else. Today, Celsius reported earnings. Unfortunately, it's down a bit, but after the big whales watching this channel is kind of moving a bit up. We have Disney reporting after the market closes. We have Airbnb as well. We have SoFi, and we have Tattoo Chef. So I think tonight I might be busy in forms of videos. So I'll definitely take a look at that. Tomorrow, Friday, we don't have anything important in my opinion. in form of my markets, the semiconductor market is definitely taking a hit right now, especially Micron Technologies. Micron's is down about 7% right now. Oliver, what is your expectations on Gravity earnings? So Oliver, yes, so for sure, Gravity, one thing I feel, and I've talked to Risfis a lot about this, Gravity, I want to say, is very difficult to read. One, I don't think they give guidance. Two, their overall investors relations website is pretty weak. They don't share too much information. For example, yesterday they kind of announced the pre-release of their Gravity Origins game here in North America, and you don't kind of hear about that in their website as much, especially in their investors relations website, which I think it's pretty weird. I mean, if you want to grow with your investors, so that's one of the things I'm not a huge fan of Gravity. In forms of expectations, if we take a quick look at, let's take a quick look at App Annie. So this is, I enjoy looking at App Annie, especially for top plays. So let's take a quick look at top Google Play downloads in overall in games. And we know Gravity right now is mainly in Southeast Asia. Let's take a look at top Southeast Asia countries' economic rankings. So if we take a look, number one Southeast by GDP is Indonesia, right? So if we take a look now at App Annie here, App Annie, let's take a quick look at Indonesia and let's see where, if any of, we can see Ragnarok is number 4 in the overall grossing games in Google Play. If we take a look at overall, Ragnarok, I believe, is still number 4. So Indonesia, one of the highest GDP countries in Southeast Asia, Gravity is doing pretty good there with Ragnarok. Number 2, let's take a quick look at Thailand coming in at number 2 with GDP in Southeast Asian countries. So what did I say? Thailand, I believe. So if we take a quick look at Thailand, in the overall, let's let it refresh. Come on, computer. In overall, yesterday on August 11th, Google Play, the top ranking number 2 was Ragnarok. C Limited is always, it seems to be number 1 here, and it has Garena number 3 as well here. So C Limited is still pretty popular. So overall, now let's take a quick look at number 3. What is number 3? So number 3 is Philippines. I don't think it is in Philippines. I don't think Gravity is in Philippines. Do I have it here? P. All right. So Philippines right here. Oh, actually it is. So the Philippines overall, Ragnarok is still number 2, right? Garena's there with Call of Duty, and we have Ragnarok and Eternal Love in number 7. So overall, I want to say, Oliver, they're still going to show strong earnings. The real question is what are expectations going to be like, especially if grossings are still pretty high. I do think the most important, and we see a higher backlog of their games kind of being released in the second half of quarter 3. So I think quarter 2 might just be quiet. Quarter 3 will probably be where better returns are expected. But I'm happy to see grossings in the top 3. Indonesia, Southeast Asian countries. One, we see Ragnarok in the top 5. Another one, we kind of see, Tim, if you're out here, you saw Roblox in a lot of them, but we also saw a lot of Garena, which is C Limited. So overall, 3 bullish gaming companies right now, Gravity, Roblox, Garena, out there right now. Supercell's also, I think, in all of them. Nope, it wasn't. But yeah, see Garena again, and here we go with Indonesia. We have Garena and things. So it does look pretty good in forms of money coming in from games for both C Limited and Garena. I'm talking about C Limited. So those are my overall thoughts. Oliver, obviously, I don't know how stock price will react with any of it, but overall, the company and the games seem to be doing good. Fizz, you're going back, got out of my meeting. I'm back. Oh, Fizz, man, you just missed it. I just talked about Gravity and how its games were doing amazing in some of the top Southeastern Asian countries. So let's see, C stock. So C Limited right now, stock is killing it, up 1.5%. They do report earnings next week, I believe. So this is one I'm super excited. Let's see. What else? Any questions? So Hudson, what's going on, Hudson? True Life Cannabis Corp earnings today. What are your thoughts, Hudson? Unfortunately, that is a market I don't follow. So usually the cannabis market is not one I follow. So I can't give you any opinions, Hudson. What are your thoughts? If maybe you might try, are you in the position, Hudson? What is your bullish case? Sometimes, Hudson, I would say it's helpful to kind of share your thinking to kind of make sure, hey, this is really what I see this company doing in the future. But let's see. Yeah, Q3 is gonna be nice. Thanks for pumping gravity for me. I don't think I did that. I don't think big whales are kind of. Never mind. Obviously, guys, this is a low volatile stock. Don't even think about gravity right now. But let's see. Spotify. So AP, you want to take a look at Spotify stock. Spotify. So Spotify is definitely one I enjoy as well. This was a tier 1 stock for me in 2020. So Spotify is one that I believe I'm bullish because of the overall audio market, right? I do believe the audio market is still increasing. A lot of people think Spotify might not do strong now that things are reopening, but most of the times, the only time I listen to Spotify was when I was driving to work, right? On my commute. When I'm driving is when I listen to most of my musics. When I drive is pretty much when I listen to a lot of podcasts. Now that I'm still working from home, guys, Spotify is still one that I listen from time to time, but I think it's one that still does well as commuting is coming back up. Spotify is also focusing a lot in technology improvements. They're also building brand awareness, and they're trying to bring genres of products and originals to bring more users. So Spotify, I enjoy. I do think one of the biggest reasons stock price is down right now, if we take a look from its 52-week high, the stock is down roughly 41.78%. Is overall monthly active users did see a decrease, but they're still seeing an increase in revenue. They're still seeing an increase in paid monthly active users. And now they're seeing an increase of advertisement. Advertisement now makes up more than 10% of its revenue. So Spotify, obviously, we've seen things like Pinterest, we've seen stuff like Etsy. I think Spotify is kind of similar method where monthly active users is affecting it, very similar to Netflix as well. But I believe in the long term of things, Spotify is still there. If we take a quick look at charts, let's take a quick look at Spotify. Spotify, like I mentioned, last year was a tier 1 stock for me. So I really got into this I want to say the low 100s, maybe even cheaper than that. So for me, I'm happy with my position size. If I really wanted to double down on Spotify, I think the levels is at right now is a good point to do that, in my opinion. Doesn't mean it's advice. Obviously, the stock price can continue to go down, but I do believe these levels is at right now is a great time for me. If I wanted to add a base, this would be the time. So Spotify, definitely interesting. Just a lot of people worried about their margins, I think. So I remember reading about Spotify is most of its increase in revenue is the low profit margin ad revenue segment, the free users of Spotify. Sorry, Danny, let me read that up. I remember reading about Spotify. It's that most of its increase in revenue is the low profit margin ad revenue segment, the free users of Spotify. But I don't think that's actually true. I did redo their earnings. They did see an increase, right? In forms of revenue growth. Ad revenue growth jumped dramatically. It jumped like 121%, but that's because it grew from like 2%, from like 5% to like 10%, right? So the overall revenue numerical growth is higher. The actual numerical growth is still pretty strong from its from its paid users, for sure. Even though the numbers don't look as strong, numerically it's still pretty strong there. So Oliver, I've been wondering where you see Digital Turbine going after good earnings. The last few data, it has been down. So Oliver, so I haven't really taken a look right now. So I know some of you guys, I think Aaron, if he's still in here, he's probably mad at me because he wanted me to take a look at Digital Turbine. Digital Turbine is one I definitely want to keep an eye out for. It's a good position in my portfolio. I haven't really looked at earnings, right? And this is the thing. Sometimes I don't say one earnings either break or make a company. So I'm okay kind of chillaxing for a bit before looking at earnings, unless you are a tier 1 stock for me, like Unity, like Nvidia, then you get my prime attention. Digital Turbine, the ad tech market, we've seen it from Google, we've seen it from Magnite, we've seen it from everybody else, is still going strong. So there's nothing really pushing me right now to really look at Digital Turbine. Obviously, stock price has taken a hit after earnings, but this is a company that is doing smart acquisitions. So I don't think much has changed. I'll have to look, but we can see from its 52-week high, the stock is definitely down about 38%. This is another one that right now, if we take a look, at, I don't know why I did a little dance there. That was pretty weird. If we take a look in technicals, right now I am bullish in the company. Right now would be the time where I wouldn't mind like increasing my exposure, right? This is a company that sometimes gives you buying opportunities. This uncertainty in the overall market, we've seen it recently, right? A lot of tech companies kind of sold off this week. For example, one of them was CrowdStrike. CrowdStrike yesterday, I think, was down about 5-6%. We're seeing kind of a rotation, I want to say, back to value stock. I'm not doing any rotating myself, but it does seem like that's happening around the market right now. And things like apps is definitely one that could be affected due to that. But Oliver, at the moment, a few days of downturns don't really mean much to me. Value where it's at right now, I'm happy. I'm gonna do a few videos, maybe one that I wouldn't mind increasing my exposure sometime soon. So let's see. It was fun listening to the Unity call together. We should all do that together more often for stocks we all enjoy. Very true, Fizz. One thing I would like to do is doing a live stream on earnings calls. But sometimes I just need that time to really think and listen. So I'm pretty sure if I did a live earnings call live stream, I would probably be quiet the whole time because I'm just reading and listening. So I don't think it would really be any fun for anybody. But yeah, definitely. As far as I know, apps had good earnings. Ari R, what's going on, Ari? How's it going? Definitely, right? I mean, that's what I keep hearing. And I saw a few investors that I follow really talk up apps. So sometimes you just get buying opportunities, right? It's volatility is in the market. Volatility is what gives us the ability to provide great returns in the long term of things. So especially when volatility hits some of our popular stocks, if for example Nvidia was to take a huge hit today, I don't think any fundamentals would have actually changed, but I do believe I would get into it. So let's take a quick look at my portfolio. Let's see what's happening. So my Play Studios, this is probably one of my worst plays right now. Small position, but I still like it. It's down 14.7% right now. One that's very, very volatile. But let's take a quick look in the overall market. So CrowdStrike is up 2.9%. Unity, I can't believe Unity is still running up. Unity right now is up 2.76%. C Limited is also up 2%. What else do we have? A lot of big players are up in my portfolio. Nvidia is up 0.74%. AMD is also up about 0.17. So it does seem like some of the big players in my portfolio are doing good. I hope you guys are doing good in your accounts right now as well. Whew. So let's see, does anybody have any other stocks they want to take a quick look at? And if not, let's take a quick look at what's trending in StockTwits. Is anything happening in the market right now? So Clover is still up 9%. Micron Technologies, again, this one is definitely taking a beating right now with the overall semiconductor memory decrease in prices. This is down 7.46%. Upstart is up 4.8%, I believe, today. What's going on, Sniff? How's it going? Hey, could you take into Core and Maine? CNM. Let's take a quick look at that, Sniff. Appreciate the donation. It means a lot. It definitely means a lot. Grow Generations is down 17.4%. Oh, did they? Extraordinary. So Morgan Stanley downgraded Micron Technologies. I do believe that downgradation in Micron Technologies is due to the overall decrease, or kind of talks about memory prices going down. Palantir is up to $25. So congratulations to Danny. Congratulations to anybody out there that's holding Palantir. So best of luck. I don't know. Maybe I might try to do a video on Palantir just to increase my overall knowledge in that company. But let's take a quick look. So Sniff, you want to take, I'm not Southwest. I'm looking for Simply Wall Street. So Sniff, you want to take a look at CNM. I'm not familiar with this stock at all. Core and Maine. So Core and Maine, they distribute water, wastewater, storm drainage, and fire protection products and related services to municipal private water companies and professional contractors in the municipal, non-residential, and residential end markets in the United States. If we have any civil engineers out here, has anybody heard of Core in Maine? I feel like maybe you guys might have some form of value into it. But first thing I can see, right, Sniff, $6.3 billion market cap. Not a big company, not a small company either. If we take a look at future growth, there's actually not much growth expectations here. Analysts are not following this company. So let's try to take a look at past performance. So what are we seeing with C&M? First thing we're seeing is this company is positive in earnings. They are profitable in cash flow from operations. Now, if we take a look at their financial health, let's take a quick look. So right now, I want to say the first thing in forms of red flag, Sniff, even though this company is profitable, even though it is positive in earnings, in cash flow from operations, they do have a good portion of debt, $2.3 billion, and very short in cash and short-term investments. Normally, I'm not a huge fan of leverage companies unless I'm super bullish in that market. So that would be right off the bat a yellow flag, right? That to me is a yellow flag. The real question is, when is this debt due, right, Sniff? If it's due 10 years from now, then maybe it's not that important. If it's due 2-3 years from now, then maybe it is. It doesn't have any form of dividends. And if we take a quick look at ownerships, venture capitals and private equity firms, this one Clayton LLC, every time I think of Clayton, I think of the of that Tarzan movie. But anyways, so this LLC owns pretty much 78% of the business. I kind of talk a lot about this, how this is a double-edged sword. Obviously, it's very bullish to have one person being this bullish in a company. The same time, if someone sells off, if they sell off, it's going to be seen as a really big red flag. Now, let's take a quick look at this company in form of... let's take this in form of technicals. So this is C&M. So Core in Maine, Sniff. So this is a recent IPO. Okay, so this is a recent IPO, it seems. So there's not much information in form of technicals. It's definitely, I want to say, a bit overextended from its IPO price. I don't think we will have any informations in Y charts, but maybe Lazy FA might. So let me pull up some Lazy FA real quick. This is C&M. C&M. Palantir to the moon. Yes, I keep seeing that, Alan. What's going on, Alan? What's going on, Kim? PDD, can we take a look? Sure, we can take a quick look, guys. But let me finish this up with Sniff. Down 30% since I acquired it. Oh, PDD, I mean, right now, Kim, one of the biggest things of PDD is just the overall exposure to China. So that's really driving, I want to say, most of these Chinese companies down right now. I don't think there's anything fundamentally different with it, Kim. It's just the overall overreaction of Chinese companies and the Chinese market. So right now, this is historical growth. So another thing about C&M, even though the company just IPO'd, Sniff, they obviously have to share some information. In 2020, they only grew 7.4%. In 2019, they grew 5.8%. So right off the bat, not a fast grower. Even though they're this is more, personally, not a company for me, Sniff. Again, I don't understand the market they're in, but they're not growing at crazy levels. In my opinion, some of that yellow flags were the overall financial health, not that strong. I do want to say, though, let me just say this. Now that I know that they are a recent IPO, there's some things you have to keep in mind of. Because they are a recent IPO, they have built up, obviously, cash. So with that cash building up, they're most likely going to use it to increase overall their cash and short-term investments or to pay down that debt. So even though their balance sheet right now is screaming a yellow flag for me, depending on how much money they built up through the IPO process, they will be able to use it for reducing debt or stuff like that. So that's something to keep in mind of. But overall, still not a huge growth company for me in form of historical growth. The only green flags I see were that it is profitable and positive in cash flow from operations. So let's see. But yeah, so that's sometimes something I forget about, right? If a company just recently IPO, it means it's building up cash. So that cash, they might talk about it in their IPO letter that, hey, we intend to use the IPO money for this and that. How about DXLG? Quarterly revenue growing and earnings growing. Positive as well. What's going on, Flyboy? First time, I think it's the first time seeing you on the streams. Thank you for the support. But let's see. So what's going on, Carlo? Carlo, I haven't seen you in some time. Let me just take a quick look at some of these stocks real quick. So let's try to do a quick one. Let's start off with Mogo. If I missed one, feel free to post it again. So Mogo, right? I mean, this is a very volatile stock, super small market cap, right, Carlo? I did a few videos on it before. This is one that, for me, right off the bat, is a tier 3 stock. This is a small Canadian fintech company that's trying to grow over time. So right off the bat, this is something that's going to be very, very volatile. This is something, if you want to increase your exposure in like the fintech market, right, Carlo? If you want to increase your exposure in the Canadian base in a really small market cap company, Mogo, I think, is a good play. But at the end of the day, it's one that's going to be very, very volatile. If we take a quick look, if we take a quick look, this is not the Mogo I want. Like I said, super small market cap. It is expected to grow at crazy levels. The company is not profitable. They are positive in cash flow from operations, it seems, because they are kind of moving into more of a trading platform to some extent, and that's kind of helping them out. I do believe they kind of entered into some form of like crypto trading platform in Canada, which is probably helping this cash flow from operations. At the end of the day, I do believe that's going to be very volatile, and it is downtrending. It might go back to negative, but right off the bat, very speculative play. But if we take a look at their financial health, they have about $95 million in cash, about $93 million in debt, a 1-to-1 ratio, not something I like to see. So right off the bat, this is kind of another red flag there, or yellow flag. Again, this is a very, I want to say, very, very volatile play, a very, very speculative play. Michael, who is the independent director, individuals don't really own much. Again, Mogo, for me, it is in my portfolio, very small position. One I don't think I'm adding to anytime soon, but one that if it does do amazing stuff, it can provide great returns. So let's see, what else do we have? Flyboy, this is your first time here. All right, Flyboy, so let's take a quick look at the XLG. Let's Destination, is this one it? Destination XL Group, Flyboy, and don't worry, guys, I'll take a look at the other stocks you guys mentioned. So Destination XL Group. Let me know, Flyboy, if this is the stock. While I wait for your answer, let me take a quick drink. Yep, correct. All right, so Destination XL Group. They operate as a specialty retailer of big and tall men's clothing and shoes in the United States and Canada. Unfortunately, I'm not either tall or big, so I've never heard about them. Maybe some of you guys are over probably 6 feet around here, and maybe you guys might have heard of Destination XL Group. But we can see super small market cap, 329 million. So again, right off the bat, this is going to be something that's very, very volatile. Right now, I can see the company is not profitable, but they are positive in cash flow from operations. So that's kind of a green flag there. It's expected to grow at 10%, rough 9.2%. Not the heaviest growth, not the weakest growth. Right off the bat, if I wanted to enter in a super small company, just my opinion, Flyboy, something this small, I expect heavy revenue growth. So financially, already I can see $50 million in debt, no real cash available to them. Most of their cash is, I want to say, liquid cash or assets are in inventory. Some people might like this, some people might not like this, right? They are a store, so inventory, when they sell things, they usually only have cash for very limited amount of times to build up that inventory and continue to grow from there. To me, this is not another yellow flag. So for me, not a heavy grower for my taste. Not even positive in earnings. If you are not a heavy grower, you should be positive in earnings and positive in cash flow from operations. The second thing is this overall balance sheet, not the best thing for me. Again, this doesn't mean the company is bad, just not my investment styles. General public, it's pretty much equally. Individual insiders on 21, hedge funds on 31, institutions on 8%. So, and next, let's take a quick look at this company's charts. I do want to say one thing. I do in forms of risk, it's right now pretty overextended. That doesn't mean the stock price will go down. It just tells me the risk is a lot higher. So if I was bullish, if I had fractional trading, fractional free trading, if I was bullish right now, because it's so overextended, I would only open up a very small position because of the higher risk of a pull down. There might be better fish out there in the market right now. So Elias, Inuv, you opened in a tab yesterday. You did mention 1 billion was small. Did rule them out for that. I don't think I ruled them out. So just because they're under 1 billion, it doesn't mean I rule them out. It just tells me, hey, Jose, you have to understand there might be a little bit more risk behind it. There might be a little bit more volatility behind it. So it's just, hey, Jose, if you enter into any of these stocks, just remember, open with the smaller position. Jose, there were a lot of bullish upgrades on Unity from the top analyst. The top analyst, there's only one top analyst for Unity, Rizvis, and that's me. All right. So, but yes, I'm super bullish on Unity. But yeah, I did see that a lot of there have been a lot of price target upgrades on it. Great to see. At the end of the day, it is a bit overextended. I'm not planning on selling Unity anytime soon. This is a tier 1 stock for me. It will stay a tier 1 stock for me for multiple years. David Becker, what's going on, David? So guys, I do have I have some other engagement at 11 o'clock. So I need, actually, Gordon. All right, Gordon, just because you asked twice, we're going to take a quick look at Logitech. So I'm guessing Logitech, I've done a few videos of its competitor, kind of Corsair. And I kind of did a comparison between the two. Gordon, I want to say a few months ago. Those comparisons, even though they're a few months ago, don't really change over time. I want to say right now, in forms of technicals, right off the bat, not overextended. A good portion of the stock price has been eliminated. Let's take a quick look at fundamentals for it. Logitech International. Oh, I didn't know Logitech was a international company. But $18.3 billion market cap, right? So it's a decent size already for the portfolio it's in. If we take a look at future growth, this company is expected to grow 7.7%. They are profitable in earnings. They are positive in cash flow from operations. So right off the bat, that's super strong. If we take a look at their financial health, super strong again. Plenty of cash, $1.5 billion in cash, no debt to their name. If we take a quick look, Jose, after subscribing, I couldn't send any chats. LOL. Edgar, you should just wait. I think after 1 minute, you should be able to message. I think it's only one minute before you can subscribe. But anyways, thank you for the subscription. And I will be on tomorrow, even though I'm normally not on Fridays. I think I'm pretty relaxed this week. That I will be doing a live stream tomorrow. So overall fundamentals look super strong for. Oh, what's going on, Ed? Did you? Oh, that's weird. Really, Ed? So after doing the support level, you were unable to chat? That's insane. That is definitely insane. Let me just take a quick look at Logitech investors. I gotta see, that's weird, because we have Danny here kind of talking, we have Fizz kind of talking, so that I have to look at what's happening there. But let's take a quick look at their presentation. Oh no, they haven't reported earnings yet. So their Q1 upcoming earnings are expected to grow in August 16th. So they still haven't reported earnings yet. So that's something to keep an eye on. But at the end of the day, Gordon, I do believe the stock in fundamentals is looking straight. Technicals don't look half bad. Earnings can obviously, no, but they did report earnings already. And it was a surprise beat. But unfortunately, guys, I do have to jet out. Gordon, sorry if that one was half done. Thank you guys so much for the subscribing. Ed, thanks for the subscription, even though you are unable to talk now. Sniff, thanks so much for the donation. Danny, Fizz, everybody else in there who is a member, thank you so much for being a member and supporting the channel. Tim, you're out there. Thank you so much. But guys, I do have to jet out, so take care and see you tomorrow.